All right, we're live.
Good evening, everyone. It's 7 p.m. So we're going to give our listeners 5 more minutes to tune into this live. 5 more minutes. Thank you so much. Good evening, Miss Osi. Good evening, Christoph. We're waiting 4 more minutes. So we'll begin at 7:05. Good evening, Stefan. Thank you so much for tuning in. We'll be starting at 7:05. Good evening, Travan. Good to see you. Good to see that you are here. It's 7:03. 2 more minutes before we begin. If you are just tuning in, we will begin in exactly 1 minute. 1 minute to begin. Thank you so much. It is 7:05. It's time to begin. Welcome, 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 everybody, to Stocks on the Rocks. Thank you so much for tuning in tonight. We appreciate you so, so, so much. My name is Shante Johnson, and I'll be hosting with Julian Morris. Julian, are you here?
Yeah, man, I'm here. Good evening, everyone. I'll be co-hosting with Shante. Thank you for joining us this evening. And of course, we'll be talking about why insurance is important. So, Shante,
Thank you, Julian. So we've been doing this for some time now. You know, a lot of us are familiar with the SOTR team. We started on Palisados and now we're online. So I think that we have some relationship, a kind of relationship going. And so I want to throw it out to everybody here. I want to know, what name should we refer to you as? So I want to know in the comments below. I was thinking, you know how you have the barbs, you have the beehive. I want to know what you'd like to be called as a part of the dedicated stocks and the rocks fans. We want to know what you'd like to be called. So again, you can drop it in the comments below. We want to know what you'd like to be called. Something nice, something catchy, and then the team will look through the comments and then we'll let you know what the top comment was next time we meet. All right? So now to the topic at hand. Julian already said it. It's insurance. Why does it matter? Insurance is a huge topic. We're going to try and condense everything for you tonight in the space of 2 hours. So let's get the ball rolling, right? So we have presenters here. We have 3 presenters here. They are amazing. We've been talking to them for quite some time now, and we are so excited to share this with you. So we have Hakeem Dawkins, and he's a financial advisor from Law Insurance. And we have Kodia Clark. She is an insurance advisor from Caribbean Assurance Brokers. We have Sharifa Grandison, who is an insurance advisor from GN Life Insurance Co. Thank you so much for joining tonight. So again, if you're just joining us, it's insurance. Why does it matter? So let's jump into it. Our first presenter is gonna be Hakeem, and he is going to be talking about health insurance. And let me just say, I think most people are familiar with health insurance, possibly from their job, but Hakeem is gonna get down into the meat of it. So just a bit of an introduction for you. Hakeem has been in the business for 3 going on 4 years now as a financial advisor. He spent the first 2 years at Sagicor Life Jamaica, but when presented with the opportunity to expand his product offerings, he went to Law Insurance Brokers where he presents 6 companies, namely Sagicor Life Jamaica, Sagicor Life, Cayman, Guardian Life, Lords of London, Pan American, and Occidental. That's correct. Hakeem
Occidental
is
Life.
like Occidental Life. Thank you so much. So without any further ado, Hakeem, your stage. Tell the people, what is health insurance and why does it matter?
Good evening, everyone. Hakeem Dawkins here. First and foremost, I'd like to thank the team for having me. It is actually a pleasure to be here. The topic that we'll be discussing right off the bat, as you said, Shante, is actually health insurance. Before we dive into it, let's start from the very beginning and just wipe our minds of what we thought of insurance. Because a lot of us, when it comes down to insurance, it's all about hearsay and we don't know the facts and the fine details of any kind of insurance, right? So let's go. What is health, right? Health is actually being in a state of being free from illness or any kind of injury. And then a person will ask, what is insurance? And then insurance is an agreement between a company or the state that undertakes to provide a guaranteed compensation or a return of premium. Or we can say it provides protection against a possible event. So let me define health insurance for you now. Health insurance is the protection provided by the company against an illness or injury for an individual. So most of us, we have health insurance through our company or through an individual application with any of these companies. So let us say why we need health insurance. Health insurance is the only plan in the world that subsidizes payments, for example, doctor visits, dental and optical, prescription drugs, physiotherapy, ultrasounds, CAT scans, MRI, chemotherapy, radiotherapy, and even maternity benefits. And fun fact, a simple CAT scan just to see what is happening can cost somebody $50,000 out of pocket. An MRI, $100,000. So I want you guys to just keep that in mind. And the thing about health insurance plan, we have different kinds of health insurance plan. We have local health insurance and we have international health insurance. And the thing about health insurance, it actually covers a percentage of the things that are listed before, or they actually attach a dollar value to it. Because you have some health plans that actually cover 100% of a doctor visit, and some will actually contribute maybe $1,000 or $2,000 to the visit. So let me ask the question. If you had a medical emergency that came with a cost of $100,000 US, would you be able to afford it? Could you be able to afford it, Shanti?
You know, I don't think not offhand. No.
Not offhand. But let me ask you another question now. If you could afford to pay that out of pocket, would you rather do that or allow a company to help you along the way?
Well, I'd rather somebody else spend their own money, you know, not mine. So, of course, the company, by all means.
By all means. But and a lot of persons would agree with you. But let me drop a little fun fact. People, I will have to repeat this over and over. Your credit card is not your health card. Do not use debt to cover your medical expenses. It is going to put you in bankruptcy. Research done in 2019 that was actually published this year.
Hold on, Hakeem. Say it again for the people. What you say about the credit card for all the credit card people out there? Come again.
Your credit card is not your health card. It is not. You'll have persons, they have to run to the hospital or whatever, and they swipe their credit card. No, people, do not do that. You do not want the institution to charge you 25% on anything that you spend actually to take care of yourself. Don't go that route. And as I was saying, research done in 2019 that was actually published this year in February states that the #1 cause of bankruptcy throughout the world is medical expenses. Not just debt, medical expenses. Because you can actually have a procedure that costs you $500,000, $1 million, to $10 million, or even maybe 100 million Jamaican dollars. Things are real, people. It's crazy out here. Many persons actually ask me on a day-to-day basis, Hakeem, why do I need health insurance? I tell them, health insurance, along with critical insurance, provides you with a bulletproof vest in the case of a financial U-turn. Right, people, anything can happen to you at any given point pertaining to your health that you didn't know where it was coming from. You can literally be here fine one day, starting to feel some kind of abdominal pain. You run to your personal doctor. Your doctor says, oh, this doesn't look good. And then after that, he then say, oh, I needed to go to Spanish Town Hospital. I needed to go to KPH. And then all of a sudden, you're going to have to hear, so you're going to have to do a surgery. And you have to maybe find $500,000 up front just to save your life. And what I tell a lot of persons is that we're all likely to face a financial earthquake in a 10-year period. And oftentimes it is health related. I can just give you a little fun fact. A heart attack can cost you roughly 7.9 million Jamaican dollars. A stroke, 4.5. And oftentimes we believe that when it comes down to, for example, a heart attack or a stroke, it is something that is coming from what we call a chronic illness, for example, diabetes, or for example, hypertension. One thing that we need to know is, I take into consideration, is the things that we ingest on a daily basis. I actually know of someone who had no kind of pre-existing condition, and she had a major stroke. And the thing is, her stroke was caused by her, what we call it again, I don't want it to lose me, contraceptive pills. Actually triggered a major stroke. She's currently in physiotherapy, and it is causing an arm and a leg. But seeing that we're actually in October, let me talk a bit about breast cancer. Research shows that in a 24-month period, breast cancer can cost the following amounts based on the stage. You actually have a stage 0 when it comes on to breast cancer, and that can cost you an average of 72,000 US dollars, or in Jamaican terms, $10.4 million. Like, I don't think majority of Jamaicans have $10 million just sitting in an account. Or even the persons who have $10 million, they really don't want to spend that $10 million on any kind of medical procedure. If we're looking at stage 1 or 2, the average cost is 97,000 US dollars. In Jamaican, that is 14.08 million. Now we're looking at stage 3, and that can cost somebody 160,000 US dollars. People, that is 23.2 million Jamaican dollars. Stage 4, 183,000 US dollars, which is 26.5 million JMD. Research also shows that majority of the persons who have died from breast cancer is due to the fact they were unable to complete treatment. The average individual funds exhaust at roughly 4 to 5 chemotherapy sessions, because one chemotherapy session can cost anywhere between 150,000 JMD, like on the cheap side, or up to $1.5 million, and that is just chemo. And the cost that I stated before when it comes on to the cancer treatment, these are actually for cancer and non-cancer treatments. And the non-cancer treatment actually takes into consideration the medication needed to regulate your hormones and also to tackle the damages caused by chemotherapy. Because chemotherapy actually also affects your nervous system and everything else in the body. We're not supposed to be doing chemo at all. So let's look at options in regarding if this was going to happen. And I'm going to be realistic, right? We have local insurance and we have international health insurance. With the best local plan, you can get a lifetime maximum of 6 million Jamaican dollars. This plan will offer you around 600,000 per year for chemo, or another 600,000 for radiotherapy, which gives you a cushion of 600,000 if you're to go with either chemo or radiotherapy. So say we're actually tackling stage 1 breast cancer. As I previously stated, that actually is roughly $14 million, right? That actually puts us in the ballpark region of maybe around, say, $6.4 million in the first year of treatment, just the first year alone, which leaves us in a stressful situation. And also research also shows that doctors do not want to tell their patient that they have cancer, because it's not the cancer that really kills us, it's the stress that comes with the lack of finances to actually treat the situation. And people, stress is a major killer. And when the stress often comes up, you're going to be lead to have the certain decision. For example, selling your assets, clothing investments, or to gather funds by creating the common GoFundMe account. And to be honest, people, nobody owes us anything when it comes on to contributing to a GoFundMe account. We need to have things in place to actually cover certain things. A person be like, Hakeem, local health insurance covers this amount, but we still have a $6 million bill to pay. This is where international health insurance comes in. And international health insurance is actually backed by Lloyd's of London. And if you have this, you're in a total different situation. We have plans that actually gives you an annual benefit of 5 million US dollars. We have ones that give you 2 million US dollars. And those first two do not have a lifetime benefit. So if you're going to use up 5 million US dollars in a year, you have to be in some serious problem. But we're here, we have you covered. We have another plan that gives you $2 million in lifetime benefit for the year, but for in your entire lifetime, it's actually 10 million US dollars. And so the beautiful thing about these international plans, they cover 100% cancer treatment. Would you believe that, Shante?
Yeah, I haven't heard that before.
Yeah, man. We actually cover 100% cancer treatment. We actually currently have a client who's actually been battling cancer for maybe the past 3 going 4 years, and her medical bills right now have accumulated to 1.1 million US dollars.
Oh.
Yeah, and trust me, we're the ones actually covering it. She's in good hands. But say you have this plan and you're in the same situation with stage 1 cancer, with a bill of $40 million staring you down. You'll be in a position where you can just remain positive and get your treatment out of the way. People, many of you will know that, oh, I have health insurance with my company, but many of you do not even understand the benefits that you have. I need you guys to actually go through, take up your health card and see what you're covered for, because I'm going to tell you, the insurance that your company offers is not enough. It really and truly is not enough. If, for example,
So with
if
that,
you're
Hakeem, so sorry, there was a question that was on the screen.
Yeah.
Just now. Ashley, could you write?
Do I just walk in an institution and say I want health insurance? How do I know which health insurance suits me? That's from Chavon.
Okay, Trevor. So let me actually answer this question, right? How do you know which health insurance suits you? First and foremost, when it comes down to health insurance, it is relatively expensive if it is actually an individual plan. When the term expensive kind of is actually relative, but the average cost for it actually local plan is roughly $7,000 to $8,000 per month. What you need to look for is what actually is beneficial to you, what your concerns are. For example, if it is major medical, you want to know that if something happens to you and you're in a car accident and you have to do some kind of surgery, you want to know that the health insurance actually gives you roughly $500,000 or up to $1 million in regards to that. So you need to, maybe a lot of us, we wear glasses. We want to know what are optical benefits. If they give you roughly $8,000 for the visit, $20,000 for the visit, or if it is either or, because you have some health plans when it comes down to companies, they will give you around maybe $12,000 for the year for dental or optical. People, don't get it confused. It's not dental and optical, it's dental or optical. So Trevon, I just want you to just sit and say, what am I really concerned about? Is it the regular doctor visit, which is maybe around $4,000, or in case something happens to me? Actually, I know you don't want to sell your stocks. So look at the plan and see really and truly what suits you.
So Hakeem, you're saying that I can go and just get health insurance. I don't have to wait on my company?
You don't have to wait on your company. You can literally have your own individual health insurance along with your company insurance. And trust me, that is very beneficial, because the thing about these plans is that some plans cover 80%, and oftentimes we're left to pay 20% out of pocket. If you have one if you use one that covers the 80, you can actually use the other one to cover the 20. So when you go to the doctor, you literally pay $0 out of pocket.
Right. Okay.
Learn and grow.
Go ahead.
I said the question where the Learn and Grow Investment Club said, do I have a visibility of the plan your company offers? I can actually share a link with you guys regarding the brochure, and you guys can actually go through it and see that what I'm saying is actually true.
Right, and we're going to be sharing the contact information for all the presenters here, so you can reach out to them. As soon as this is over, you can reach out to them and talk to them and get a better idea of where you're at, and they will guide you through. And just for the people who are just coming on, you are tuned into Stocks on the Rocks. Tonight we'll be discussing insurance. Why does it matter? Right now we have Hakeem, who is taking us through health insurance.
Okay.
Hakeem?
Yeah, Shanti, you had a question for me before I continue?
Can go ahead. I think you answered it.
Okay. So I see a question coming from, I think this is
Enika Hall.
Exactly. So what are the best options when you're retired or self-employed?
Yes.
Okay. So first and foremost, what I do for my prospective clients, I need to know what is your current situation, right, regarding finances, because it makes no sense I just recommend a plan and you're in a financial constraint. That's the first thing. The best option for you is one that covers every single thing possible. What I actually recommend for self-employed persons, once they're able to afford it, is both local and international, because you do not have a company that you work for that is going to back you in case of anything. You're responsible for your own benefits. And where the local taps out, the international kicks in. All right? Is it? Can I? What if you're already sick? Can I get insured? Yes, you can when it comes on to health insurance. The thing about it is that for certain pre-existing conditions, you might have an exemption or a waiting period. For example, with persons who are diabetic and they apply for health insurance, we will give you the health insurance, but you might have to wait 6 to maybe 9 months before you can use your health card to access any kind of diabetic medication. But you still can get it once you're sick, but you might have some exemptions, as I said. So one thing that I want to really jump into is, what if we do not have health insurance? What are some of the costs that we will have to face? Think of it this way, guys. You can just bring out a calculator. Say you have to visit a urologist every 3 weeks, right? So you have to visit him 9 times for the year. And that one visit is $8,000. That's $72,000 upfront. They're gonna, when I really upfront, about over a period of time that you're going to need to find to go to the urologist. And maybe every time you go to him, you're gonna have to spend roughly another $20,000 on medication. And that's 9 times. That's another 180,000. And then you might have certain tests to do. One test can cost you 20,000. One test can cost you 60,000. Another test can cost you 100,000. And in the blink of an eye, you're at $500,000. Just because you wake up one morning, you're having blood in your urine, protein in your urine, abdominal pain, whatever. People, health, as I've seen in some of the comments earlier, health is the greatest wealth. It makes no sense that we chase wealth, and as soon as we accumulate wealth, we have to spend our wealth to regain our health. That is a big no-no in my books. A big no-no. And the thing that a lot of us even fail to take into consideration is what happens to me after I have surgery or I'm diagnosed with cancer or whatever. We still have to make money. And the number one cause of disability is due to a critical illness. So for example, you're battling stage 3 cancer with a bill of $23 million staring you down the face. You're going through excessive chemo, you can't get up, you can't go to work. What happens to your income? What do you think happens to your income, Shante?
It goes down. I mean, you have to be using it, and then you're onto a month-to-month basis. You probably have to be taking salary advances. You have to take loans from others or institutions. It seems like a mess to me.
And you realize why the number one cause of bankruptcy in the world is actually medical expenses, right?
Yeah, definitely. It's quite expensive in these streets.
It's very expensive. And for some of my clients, when I present them with the dollar value for their health insurance plan on a monthly basis, whether it's $8,000, whether it's $100, whether it's $150 per month, the woman's like, Hakeem, why is this so expensive? I'm like, think of it this way. You're paying cents to receive dollars, right? Cents to get dollars, because you're paying us $8,000, and if something happens to you, we're going to fork up $1 million to help you with a procedure that you didn't know coming. Person will be like, do I need health insurance? No. It's for any kind of insurance, it's best to get it young when you're healthy, because you want to know that if anything pops up, you don't want any financial institution to say, oh, we can't honor this because you've already had this issue or whatever. But let us jump into disability. As I said, the number one cause of disability is a critical illness. And Truth is, people, during the course of your career, you're 3 times likely to become injured and become disabled than you are to die. That's just point blank facts. When this was brought to me, Shante, I was alarmed. Like, you're telling me that I can be here working one day and I just walk down the stairs and I'm confined to a wheelchair for the rest of my life. Like, it's mind-boggling, where we actually realize that our health and our life is actually very, very fragile.
Yes, and the thing is that people don't realize this until it happens to them. But the wisdom is to do something about it before these things happen. You don't have to wait until you're in the situation.
And the thing that I actually tell most of my prospective clients, like, oh, I don't need insurance, man. I'm good, man. I'm like, insurance is an umbrella that you carry on a rainy day. When you walk out in the rain, you have your umbrella. What happens? The only thing happens is your feet get wet, right, Shante?
That's right.
But without the umbrella, what happens? You're soaked.
Yep, that is definitely true. But I like that though. Insurance is an umbrella that you carry into the rain. I like that.
And another thing is, I tell a lot of persons, oftentimes, let's continue to use insurance as the umbrella. The moment we do not have our umbrella, thunderstorm. Absolute thunderstorm. Like, your life just turned upside down in the blink of an eye. In the absolute blink of an eye. And I tell persons, let's use insurance in a different way. Insurance is a parachute. If you go skydiving, you cannot jump out of the plane without the parachute and try to get the parachute on your way down. It's impossible. It is absolutely impossible.
You're already out of the plane, right, Hakeem?
Yeah, man, you're already out of the plane.
Yeah, man, thank you for that presentation, man. It's very powerful.
Yeah, man. And just to go a little bit further, a lot of persons don't actually know that between the ages of 30 to 45, the chances of being disabled move from 1 in 4 to 1 in 2. I see a question come in from Mr. Johnson. How does one become a financial advisor? Because I'm interested in insurance.
You have to give you a call, man. You have to give you a call.
I can let you know when I'm recruiting.
Man, you have to give you a call. But thanks again, Hakeem. That was a very informative, realistic, and powerful presentation.
All right. So if we have any more questions, does anybody else have any questions online that they'd like to ask Hakeem before he goes? Didrian Burrell has a question. If my company offers health insurance, should I get more? Is one enough?
One is never enough. One is too close to zero, actually. One is too close to zero. And
so get another one if you can.
Yeah. And also, a lot of persons don't know that the insurance offered by the company is to actually protect the company. If you leave that company tomorrow, that insurance do not belong to you anymore. It's the company's insurance. It is actually to protect you, because if you fall down on the job, questions are going to come in and say, what are the things in place to protect this employee?
Got it. You hear that, Adrian? One is very close to zero. So get another one if you can. Thank you so much. So if there are no more questions, we are going to be going to our next topic, and that is critical illness. Now, many of you probably are wondering what's the difference between health insurance and critical health insurance, right? So just before Claudia starts, let me ask you a couple questions. So we're all familiar, well, most of us are familiar with online schooling at this point. So listen to these questions, get your pen and your paper, write them down and think about it. All right? So the first one is insurance only necessary for people with children? Write it down and answer the question. The next one is, do I need critical health insurance? if I already have a health card? So do you need critical health insurance if you already have a health card? Hope you're getting this down. And the third question is, if you have a critical illness plan and you never make a claim, will you lose all the money paid over on the policy? Write them down. Also, if you're just tuning in, thank you again for joining us. We're discussing insurance, why it matters. So let's jump into critical illness.
All
Just
right.
an introduction.
Okay.
Good evening, Kodia. I'm just gonna give
Hi,
the people
Shante.
just some information about yourself. All right. So they're acquainted, we're familiar, we're family, right? So Kodia is an
Yeah.
insurance advisor with a strategic planning and client experience management in her background. She operates within the insurance industry with a personal mission to position conversations around insurance as normal, relevant, and necessary. She is a member of the individual life division at Caribbean Assurance Brokers, where she specializes in life, health, and critical illness solutions from the leading life insurance companies. Having lost her father at 13, Kodia's desire is to assist individuals and families to access cash, right? So Kodia will go into, I'm gonna allow Kodia to talk a bit more about her story and jump right into critical illness. Kodia, go ahead for me. Thank you so much for joining us tonight.
Thank you too, Shante, and good night all. There's so much to pick up on from Hakim's presentation, but I'll just start by highlighting, for instance, a response to a question that you just posed in terms of the difference between the critical and health, and if you have critical, if you have health, if you still need critical. I'll probably share my story, my personal story, later in the conversation. I'll just pick it up from there. All right. So most of us will be familiar with the health insurance, as was said earlier, because thanks to our employers, we may have access to it as a benefit, as an employee benefit. No, critical illness, it can also be accessed as an employer sponsored benefit, but that is not so popular. Now, how do you, let's look at some quick differentiators. All right. So your critical illness policy is pretty much support for your health insurance. It all started because it was found that the cost of health insurance sometimes superseded what you would be able to get from a health insurance policy. So for that little additional that you may need to get your care, critical illness insurance was created. All right. Now, let me look at four specific differences. Your health insurance covers you for discounted medical costs. If you have great health insurance, it may cover everything. Your critical illness insurance, however, covers you for specific medical conditions or needs. Your health insurance likewise pays a claim to an institution or a medical practitioner. So your health insurance will pay the claim to your doctor or to a hospital, or if you have paid the cost of your care upfront, then it will reimburse you. The critical illness from day one, if there's to be a payout that is directly to you, you get a lump sum
Kodia,
paid. Hey
Kodia,
Shanti.
so sorry, but you are actually breaking up. So I'm not sure if you could adjust your mic or your position or something in the Wi-Fi. Would love to hear what you're saying, but you're breaking up.
Okay. Any better? Position is slightly adjusted.
Okay, we're hearing you. Go ahead.
Better? All right. So let me just backtrack a little bit. Looking at the differences between your health insurance and your critical illness insurance. Ultimately, you will need both. Depending on budget, that will determine, where to start. Depending on circumstances, that will determine where to start. Now, in terms of the differences for your health insurance, that will be covering your medical costs, your everyday needs, the dentist, optical, doctor's visits, labs, major medical, and things of that sort at a discounted cost. Or if you have very good health insurance, it could very well be covering all the costs, right? Your critical illness insurance, on the other hand, it pays you a lump sum of money for a specific diagnosis, right? So we're looking at, for instance, a diagnosis of a cancer, you get that money. In the case of your health insurance claim, you know that that money is usually paid to a doctor, your medical practitioner, or it is paid to an institution. It can be paid to you, but that is usually in the case of a reimbursement. So ultimately, the health insurance, the benefits of the health insurance is a little bit more controlled, whereas with the critical illness insurance, that is money that is coming to you, right? Another major difference in terms of the two types, for the health insurance, usually the insurance company or the insurer, along with if you're getting it through your company, they together will determine what your benefits are. So for instance, your coverage limits, what access how much you'll get for doctor's visits, how much you'll get towards surgeries, and those things are determined by the insurance companies, and your employer may determine, what they can afford on your behalf. If you're doing individual plans, likewise, you just have to select from predetermined policies. In the case of your critical illness insurance, you can decide what you can afford. So you can choose to buy a $2 million policy. You can apply for a $6 million policy at 12, 15. There is that flexibility in terms of the coverage level that is available to you. But again, remember, the critical illness insurance is still just for the diagnosis of a specific illness. Excuse me. All right, another main difference with the two types. Your health insurance gives assistance with the cost of a diagnosis, with treatment, surgery, or recovery. But again, your critical illness insurance is no money in hand, so you can choose to use that how you please. So the health insurance, I'm going to say inflexible, but you understand, how we're using it here. It is strict in terms of how the benefits are to be used. It's going to pay for your surgery. It's going to pay for the C-section, whatever the particular benefit is that you're accessing. But with the critical illness insurance, you're getting this money in hand, so you can choose if you wish to use it to access care, or if you just want to take it and go vacation and say, all right, me dead. However it is that you want to use this money, that is completely up to you where the critical illness insurance is concerned. All right, just to identify some of the most common critical illnesses, and I'll start with some of those that appear on the top 10 most common causes of death in Jamaica. So we're looking at kidney failure, heart attack, organ failure, cancer. I mean, you may know, I don't know if you know, Shantae, but the leading cause of death here now is actually stroke, and you'll find that stroke is covered under most of the critical illness plans, so that's a good thing. We tend to be hard on insurance companies sometimes, but really the function that they play in the society is so important. They are using the information from the medical practitioners, the institutions, both local and international, and are designing these policies to help us where we may fall short in terms of how we're able to take care of ourselves, if these illnesses should befall us. Just to point out some other critical illnesses that may not be as commonly known. We're looking at paralysis, rheumatoid arthritis, aplastic anemia, bacterial meningitis. So you'll find policies covering things like blindness, deafness, coma, major burns, loss of speech, multisclerosis. You'll find too, Shantae, that the policies are now being designed to age well with us. So whereas in previous times it was just heart attack, cancer, stroke, you now have policies covering things like multisclerosis, early onset dementia, so you can have these policies from you're young, and they're aging nicely with you for when those late age threats may onset. So that's
So
great.
you're saying that I should I'm able to take out a critical illness policy if I'm in my 20s and I'm just starting out?
Oh, absolutely you are. And it is, in fact, the very best time for you to take out a policy because you're looking at, you're likely in better health. Your premiums are little to nothing. You can get very good coverage. And let me emphasize that because what happens with a lot of persons is that they buy coverage mid-age, but because of the cost, they may only be able to afford a minimum level of coverage. But if you look at what the cost of care will require, those smaller policies can only take you so far. Hakeem was speaking about breast cancer and the costs associated with that. We're looking at least $10 million. If you have a $2 million policy, you're $8 million off. Where does that come from? So for a
Exactly.
younger person, the cost of care, the cost of the coverage is much less expensive. In your 20s, you can probably afford 10, $12 million without, missing a meal.
Wow. Okay.
Whereas if you're trying to buy it in your 40s, you may now only be able to afford, $1.5, $2 million, that kind of a thing. You get better coverage when you're young because of your health and also because of your age, and the options that are available to you too are many. You have access to more options. Definitely the time to buy is no, whatever, not just young, whatever age you are, no. You pay less today than you will pay at your next birthday.
Right.
Right?
So
Because
let me ask you a question though, following up from the question that was asked about health. Can I still get a critical health policy if I'm already ill?
all right, so that is tricky, and that's why the conversation has to be around getting your critical illness policy now, right? So you want to escape having to even ask that question, but to attack it directly, yes, we have two types of policies. You have underwritten policies, which will ask you a lot of questions about your medical health. It doesn't mean that if you're not in the best of health, you can't access them, but the conditions of your of being approved may be different. For instance, a rating. So you may not get a standard rate, but you may get a rating, above some. You may have to pay a little bit more than somebody who is in good health. We also have what we call non-medical or coupon plans. Those are available to persons who may be ill, but of course we'll have to look on that as on a case-by-case basis, because for critical illness, there are certain disqualify you from even the non-medical policies. So we'd have to look on that on a case-by-case basis, but needless to say, it is possible. But your particular
Coden, you were just
circumstances will
breaking off a
determine.
while ago.
Oh wow.
So sorry, you were just
Any better?
breaking off a while ago. Could you repeat the last thing that you said?
All right. So it's still possible to access critical illness if you're dealing with a condition now. Underwritten plans will ask questions about your health, and they'll use your responses to determine whether or not you qualify. You could still qualify given the nature of your condition at standard rates, or you may have to pay a little bit more for the coverage. For non-medical plans, which ask much fewer questions about your medical health, you could still qualify for coverage, but there are still questions that you'll have to answer. That will have to be looked on a case-by-case basis to determine whether or not you can access non-medical critical illness. But the short answer is yes, you can still access critical illness care, but your particular circumstances will need to be known to determine if that yes follows.
All right, thanks. And remember, everyone, we're going to be sharing the information with you so you can speak to each of these advisors. And they not only do what they spoke about tonight, so you can choose an advisor and you can speak to them about whatever you want to, whatever you need to, and they will help you through. All right, so we had a question just before Trevon's question. Makeda had a question. So she's asking, what does a $10 to $12 million policy premium look like?
All right. So again, the cost of your insurance is linked to your age and also the type of policy that you're buying. A couple factors will play into that. Somebody who is in their early 20s, they can probably access that amount on one of the better types of policies for under $4,000. Whereas somebody who is 45, you'll find yourself paying a little bit more for that. We have different types of policies, so it's the conversation surrounding cost is never a straightforward one. We'll have to look at your particular circumstances, see what kind of policy best suits you based on age, health, and what you may see as your, the threats or your particular concerns. Those are things that will be used to determine which policy to present to you, and then we'll look at the costs from there. But again, cost of critical illness, as with all insurance, based on your current health and your age primarily, and the type of policies that you may be interested in or which may work best for your circumstances. So that's a one-on-one conversation, Makeda.
And gender plays a role, right?
Yes, thank you. Yes, certainly gender, because the men don't take as good care of themselves, and so we punish them for that. Men tend to pay a little bit more where insurance is concerned. We benefit women benefit from lower rates.
So Trevon is asking a question. Can I pull from a policy at any time? Let's just say I want the cash.
Okay, all right. So some of the critical, I think Trevon is familiar with policies that allow you to add some investment to it. Yes, in terms of critical illness, there are some policies that do facilitate investment, and yes, depending on the type of policy that it is, you may have a short little waiting period before you can pull. But the short answer is it's your money. That part of the policy does not affect your coverage, that your investment is flexible, accessible when you want it. But you may just want to look at whether or not it makes sense to put money on an insurance policy that you intended to pull off in a short time, but beyond that, it's your money, you can access it.
We have another question here from Stefan P. If I have a rare condition that isn't listed on the list of critical illnesses, how could insurance help me? Would it only be from a regular health insurance?
Short answer to that is yes, because critical illness policies are very specific. Again, each policy will have a list of covered illnesses. So and you say if you suffer from a rare condition, right? I mean, you wouldn't necessarily be able to apply for the coverage if you have a particular illness and that is the illness that you would want to be covered, so that would exclude you from getting coverage. So I can't have cancer and then I go apply for a cancer plan. That would rule me out. But if you have a condition which is not covered and you want some sort of insurance, you can still get access life insurance. And if you have a health card, then for your doctor's visits, your prescription drugs and other treatment, you would get some assistance from a health card.
Thanks, Cordia. Christoph is here with another question. What's the main difference between a medical and non-medical critical illness?
All right. So with everything you have, I don't really like to use the good, better, best phrase, but the medical insurance gives you access to your coverage earlier. So non-medical, for instance, will have a waiting period. The more information an insurance company has about you, the better positioned they are to determine the risk that they can take on your life, whether it is for life insurance or critical illness insurance. For medical, I'm going to use the term underwritten here, which is a medical in your sense. But these types of applications, they ask a lot of information about you, about your medical health in particular. So that gives them an eye in terms of the risk that you present. No, because they have all of that information from you, they're in a better position to say, all right, we can approve this application and cover his life immediately because he's in fairly good health. Or we recognize that he's dealing with this particular problem, and so we'll approve his application, but we may want him to pay a little bit more coverage, a little bit more for this coverage because he's dealing with a particular illness, they have information which allows them to give you good rates on your coverage on your coverage, right? Now with the non-medical applications or non-medical critical illness and life insurance policies, the what you need to declare is limited. So they are selling you the policy almost blindly. So you could really be coming into a non-medical plan with, 2 days away from death's door and you know it. You know it, but the insurance company doesn't know it, right? And so what you'll find is that the non-medical plans have a waiting period which is longer than the underwritten plans where you would have made certain declarations. So underwritten may not be accessible by all, especially persons who are already dealing with critical illnesses, or may have major conditions, that would cause them not to be able to qualify for these types of insurance. But the non-medical is more accessible to persons who are not in the best of health, but you will wait, you will be faced with a waiting period for those types of applications. Most of them, you may have a 6-month waiting period, or it can run depending on the type of policy. Well, for critical illness, the longest waiting period is 6 months, but when we touch on life insurance, you'll see that it can go up to as long as 24 months. So it's to keep it short, it's more about what is required to declare, and the state of health that you can access each, that you have to be in to access each.
Thanks, Cody. I hope that was clear. I know you were breaking up just a little bit, but it's the difference you're seeing is it depends on what's going on with you, and then the time period is different. For non-medical, it can take up to about 6 months, you said.
Right. So non-medical critical illness usually comes with a longer waiting period
Right.
than the underwritten plans. Right. And non-medical favors more persons who might not be in the best of health. So whereas you may not be able to qualify for an underwritten plan, you still have the option of trying for a non-medical plan, because the declarations and considerations for a non-medical plan are much fewer.
Right. And underwritten in this case, you're talking about a regular medical.
Well, I don't want to. That's why I kept referring to underwritten as opposed to medical, because I
Right.
find that
Okay.
when persons think about medical, they're thinking that they'll need to do a medical, but that's not the case. You have
Right.
underwritten critical illness plans that require absolutely no medical. What you do in terms of a medical, whether that's an HIV, whether that's a paramedical exam or a full medical exam, will be determined by a couple of things, including your coverage level and your declarations concerning your medical health. So it's not automatic that once you're buying a critical illness plan, you have to do a medical. No, your particular circumstances could require absolutely nothing other than your signature payment and the declarations in the application.
Interesting. I did not know that. I'm learning a lot tonight. Stefan is following up. So just to confirm, if I'm on a critical illness plan already and I develop this rare condition, whether or not I can pull from this critical illness would depend on the plan itself.
All right,
Whether or not if I'm able to pull.
Let me reread it and see if I can pick up what are. So if you're on a plan already and you did develop a rare condition, whether or not I can pull from this, okay, you mean make a claim, all right, would depend on the plan itself. Well, certainly, Stefan, because again, the plan would have, at the time you bought it, it would have indicated the specific critical illnesses that it covers. So if you have a plan, let's say you have one of the plans that only covers 5 critical illnesses. It covers heart attack, stroke, cancer, blindness, deafness, but then you land in a coma, God forbid. You wouldn't be able to claim for a coma because your policy does not cover a coma. With me? I hope I wasn't breaking up again.
No, man, got it, definitely.
Right.
O'Shane Barrage, can I use my insurance as collateral for a loan to get a house? If yes, how would this work?
All right. So I'm just going to say yes for security, in terms of using it as security. We will touch on this in the life insurance presentation. So if O'Shane can just stay on the live, we'll definitely touch on that in a little bit.
Thanks so much. Do we have any other questions from our listeners tonight? Any more questions before we jump to our next segment, that's life insurance? All right, so we'll be jumping to life insurance with Sharifa. Again, if you're just joining us, thank you so much for tuning in to Stocks on the Rocks. We're talking about insurance. Why does it matter? So if you're just coming in, you missed Hakeem and his great presentation on health, why you should get health insurance. So let me just give you a tidbit here. He is saying that the health insurance that you get from your company is probably not enough. So consider getting an additional health policy, and you can do this. So you're not just limited to the health plan that you're getting from your employer. And you just missed Kodia. She was talking about critical illness and how important it is. Also, one very important thing, if you have a particular illness, don't just rule yourself out. There are options there for you to be covered. So again, that would be on a case-by-case basis. So speak to your advisor. We'll be sharing the in contact information for our advisors here tonight. So moving into life insurance. So we're going to invite Sharifa Grandison to come on, and let me just give her an introduction. Sharifa started off her career at Bank of Nova Scotia Jamaica Limited, where she developed a proven track record of supporting and improving the standards and processes of various departments and units. She specialized in operations management and was especially focused on creating an exceeding customer experience, both internally and externally. She also enjoyed helping customers secure what is most important to them. So when the opportunity presented itself to venture into life insurance, she thought it was a very good transition. Sharifa has been an agent with JN Life Insurance Company since 2018 and is passionate about sharing with as many as she can and as many that she comes in contact with, right? So she is very passionate about it. And if you realize, guys, for everybody that we have here, Hakeem, Kodia, Sharifa, they're really, really passionate about what they do. They're not just about selling you a policy. They want you to understand. They want you to learn from this, and they want you to make the right decisions. So we have a couple questions here for our listeners, right? Just before Sharifa begins. And you can write it down again. You can take out your pencil, your pen, and your piece of paper. Ready? Am I mindful of the financial impact? Am I mindful of the financial impact that would be left on my loved ones if I were to pass away? What's gonna happen? The next question is, what is a family indemnity plan? Do you know? What if I become disabled due to an accident? And then I said 3, but let me give you one more. If I should pass, can my family afford the expenses for the burial? And let me tell you, burial is not cheap. It's not cheap at all. Sharifa, without any further ado, come and tell the people what's going on with insurance, life insurance.
Hi, good evening, Shantae. Good evening, Julian. Thank you for having me, and to your listeners. Happy to see how interested you are in hearing more about life insurance and, just asking those questions and getting that well needed answers. All right. So Akeem and Kodia shared a lot. And what you'll find is that as I am sharing with you, you'll see that they're intertwined in life insurance. So life insurance is, what is it? It's a safety net, basically. What Hakeem shared about the needs for health insurance, the various um, conditions, illnesses that persons may find themselves with, Kodia picked up from there, and she spoke about, because for some of these illnesses, they're chronic. So chronic illnesses are illnesses whereby they can be treated with lifestyle, they can be treated with medication, that, all of that. Then the critical illness now, you have a case whereby chronic illnesses can now develop into critical illnesses. And the critical illnesses are the ones whereby, if diagnosed and not treated now, can lead to death, right? So that now comes into the life insurance aspect. And what life insurance does, it positions persons to deal with the life, these life events when they are passing away, when they happen, whether it is to, us here or our loved ones, it positions us better. Now, what you find with a life insurance is that there's a contract. So it's a contract between the insurer, like any of the companies that you see we represent here, or it, as well as it's a contract with the policyholder, meaning the person who sought to get insurance. So what the insurer is saying is that I'm giving you a guarantee that there's a payment of a death benefit to your named beneficiary, whoever it is. Julian, you have a policy, Shante, if you have a policy, whoever you name as your beneficiary, there's a guarantee that a payment of the death benefit based on the coverage that was chosen, that will be paid out when the insured is no longer around to provide for these persons. So you have here the insurance company promising this benefit in exchange for premiums. So when you hear premiums are just a monthly payment. Kodia touched on it when she spoke about the different things that are looked at to arrive at the premium. The two main things that we take into consideration, age and gender, right? So the premium, you can decide whether it is monthly, quarterly, semi-annually, or annually that you make the payment. So these premiums you pay, you get your chosen coverage in return. So with life insurance, we have two major types. You have the whole life, sometimes called permanent or ordinary life insurance. So when persons hear life insurance, at first it might be, like they're kind of resistant to listen to it because you're just thinking of death. But we're going to get into some more things to show you how it can serve you, so you realize it's not just that final expense. So with the traditional whole life insurance, you have the death benefit and the premium that is assigned to it based on age and gender, whatever else you present, as it relates to health status. And this generally stays the same throughout the life of the plan. As Kodia noted to you, Shante, the younger you are, the better it is as it relates to how much you pay for insurance, right?
So the
And
same goes for life. So critical health
yes,
and life. So the
yes,
sooner you start, the better.
yes, definitely. Koda even mentioned the age 45 versus the 20s and the 30s. Trust me, it's a great difference in the premiums that you pay, because as she noted, the older we get, the more it is viewed that we are more susceptible to illnesses, to accidents, and so the risk is greater. So the insurance company, as insurance advisors, the companies we represent, they all want to cover you. But at the end of the day, we are mindful that there are different things at play. And so we also have to, be careful as it relates to what it is that we are doing. So we have to ask all of these questions to ensure that both parties are having a beneficial, experience at the end of it all. Then the next type of insurance, term insurance, this is basically the simplest form of life insurance. It pays only if death occurs during the term that you had chosen. That's why it's called term insurance. So it's usually from 1 year to 30 years. You decide as the person seeking insurance based on your needs. Now, there are risks that are associated with not having life insurance. Just asking, maybe one from each of you, Shante, and Julian, what do you think could be a possible risk of not having life insurance based on what you have been hearing so far too?
So the first thing that comes to my mind is not not having, well, my family not having any money at all to give me a proper burial. That's the first thing that comes to mind.
Mm-hmm. And you think it's a proper burial. What does proper burial look like to you?
I mean, I want to be in a casket. I don't want them
Okay.
throw me in a box.
Okay,
And I
okay,
know the
okay.
financial, as I was saying before, I know that funerals can be very expensive. I know this firsthand, where you
Mm-hmm.
have to be asking family members from here to
Mm-hmm.
Timbuktu if somebody can contribute
Mm-hmm.
some money, and not to mention the other things that we don't think about. The cost, sometimes there are costs associated with getting the church to be used,
Yeah.
the plot that you have to pay for and things like that. And even after that, is it's living, not just
Mm-hmm.
about just the events of the funeral, but how does your family continue if the breadwinner is out, or
Key
even if
points.
the supporter is out? How are you gonna manage?
Key points. Key points.
There's also,
There's a question here.
okay, go ahead with the question.
They said, is there, from Christoph Ellis, is there any benefit paying premiums monthly, quarterly, or annually? Well, Christoph, thanks for your question. It doesn't mean that your premium would decrease. It just is based on affordability to you, what is most convenient to you. For some persons, they do not want to see anything going through their account monthly. For others, they prefer that. So also in paying, it may be via the PAP, pre-authorized payment arrangement, which is for other banks, whereby funds is debited from your account, or via salary deduction, or if it's standing order, based on which bank you're using. So it's really based on what is most suitable to you, the insured, and you take it from there.
I
All
was
right.
answering your question earlier, Sharifa, when you were asking
Yes,
about
Julian.
the benefits of life insurance and what comes to mind. A
Please.
big part of the life insurance equation is estate planning, because we all have to go one day,
Mm-hmm.
and we are going to leave people behind, and
Mm-hmm.
it's very wise for us to be able to transfer the assets and the things that are still left behind, and
Awesome.
insurance is a big way to pass that on, because transferring assets comes at a cost. Many of us don't think
Definitely.
about that. You can't just
Definitely.
pass on a house for free. It doesn't work like
Mm-hmm.
that. And
Mm-hmm.
life insurance helps to smooth over those costs.
Awesome. Thank you for that. You and Shanti on the ball. So, that as it relates to looking at the risk and not having it, as you just said, I mean, death, there are times we know of persons who are ill, and take for instance a critical illness. There might be a timeline, right? I've had personal experience with that, where I was told that the person had 18 months to live. Now, even with the expectation, a timeline is there. When it happens, it is sudden, right? And so, if you're really thinking it through, there would have been expenses leading up to the time of death. So, coming down from what Akeem had shared with us, is if there isn't adequate, so we're not saying there's not health insurance, but if there's just health insurance, but there's no critical illness, the health insurance can go so far and no more based on how much you have. And then if you don't have the critical illness, it compounds it even more. By the time the person passes on, the loved ones who are left to take care of those final expenses, plus the bills that are still there, it can be very stressful. So that is a very high risk. And that in itself can lead to persons developing what we call chronic illnesses, right? So it's like a vicious cycle. And then you have the whole thing of death being unpredictable, right? So with whether predictable or unpredictable, not having funds in place means that, those who are left behind, they either have additional debt to face, or they have new debt to face, or the debt that they have because this debt has been added. It means that because they're gonna find it, whether it is Shantae said it, whether you have to call people from Timbuktu, or is those near, whether it's an institution you go to, or it is a friend. At the end of the day, it is something that your budget would not necessarily be able to afford it. And so you might find that there is a prolonged period over which to pay off those monies, right? And then you, with the impact to loved ones, the very important note there as it relates to the whatever is left inherited real estate. Persons feel so good. Yes, I inherit this XYZ, but then with the transfer fees, they can't do anything much for a while, you know? And so they're faced with that challenge. So with the loved ones who are left behind, you see the loss of income, especially if you have a two-parent home, you have a loss of income, and worse if it's a single parent home or a single breadwinner home. What it means is that that income being lost, it puts additional strain in that household. You have children, whether it doesn't matter if they're toddlers or they're in the university. At the end of the day, school fees are impacted, lunch money impacted, right? And everything related to school is impacted. And then you have lifestyle changes. If persons were used to a particular lifestyle, with the loss of whatever will be coming in from the death of that person, it means that you could have a significant change in lifestyle. And you have some liabilities affected, mortgages not being able to be paid, loans, credit card not being able to be paid. So with looking at those risks that you find of not having life insurance in place, we're now going to the identified and non-identified benefits. So what I would have touched on already, I'll just mention and move on. So we know with the identified, easy, burial expense, we call it final expense. It goes on, it's more palatable to persons because people are averse to insurance at time because they're just thinking of burial. But with those final expenses, Shanti spoke about even after the Thanksgiving service. Some people have repast. I know COVID going on right now, but even with a handful of persons, the fact that you have to, if you want to have a little gathering somewhere, whether at your home or somewhere else, even if it's a 15 persons only, there is still a cost. Everything has a
Listen, and
cost.
people are expecting the people in your community will come up with and start the yard. You better have food.
Shante, let me tell you, you're lucky you reach the people. The men, if you have a family plot, the men who are digging the graves have
Yep,
to buy their little thing to
yep.
cover whatever, even though you're paying them, right?
Minimum one bottle of white rum.
Okay, so
Minimum.
it might sound crazy, it might sound as if no, not, but you see, everybody's situation is different, and these are some realities that persons really do face, and it is frustrating. And then you have this heated situation arising among family members, loved ones, whoever is involved in that process of taking care of the final expenses, and risks can come. And so you want to, life insurance steps in here to alleviate the stress, to prevent these falling outs that come along from time to time. So another identified benefit, you have a cash value. I know, you have plans whereby after a certain time you might surrender it for the cash value because you say, no, I hear what? I need my money. Whether it is that you say you have something else in place, can deal with that expense later on, or whatever the reason is, you can surrender it for that. And then you are, for some plans, you can have that savings portion to it, or or investment portion to it. So those are the easily identifiable benefits to an insurance plan. And we call some of these benefits that we add riders. So if you hear me say the word riders, they're benefits, right? But the non-identified one, I love the one about the what do you call legacy, the dead left, the real estate that is left back. I have
Yes, the
persons,
estate.
yes, persons who working at administrator general would say, a lot of people can't do much because they can't pay the fees, you know. So people don't realize that there are persons who use life insurance to build legacy.
So give us a breakdown of what fees can look like
Or,
executors fees, transfer fees. Make it real to people because they might
or
not even know.
all right. No, I don't. That part I don't know to present right now. Could probably provide that with you later on as it relates to the fees. So definitely, I will touch base with Julian Shante to assist with that, and also with the assistance of Kodia and Hakeem. But the fees are real, guys.
Yeah,
Sorry.
I've actually seen it firsthand
I figure
because
because based on what you're talking first, younger persons don't speak about things like this. So
yeah,
for you to bring it up, I was saying it seems like you are familiar with it.
yes, I've actually seen a situation where a property was being inherited, and let's just say the inheritance is not free because the
Mm-hmm.
person died and left the property behind and it was willed. But
Mm-hmm.
just because it's in the will doesn't mean that it's going to be straightforward. You have to pay the lawyer, you have to
Mm-hmm.
deal with the RGD, you have to deal with the
Mm-hmm.
government because there are also fees that have to be paid to the government. And
Yes.
if those fees are not cleared by a certain time, the fees actually increase for
Mm-hmm.
each year.
Yes.
So, in other words, I don't want to use the word interest, but the amount that is payable to the government increases incrementally year by year.
Mm-hmm.
So the fact of the matter is, Hakeem, yes,
Right,
20% of the
Akeem,
value of the
I'm just
estate.
gonna say it. Yes, 20% of the
So
value of
if
the
the
estate.
estate is worth 100 million, it means that the fees will come to roughly 20 million.
I just
Just
work out 30 million, and I'm telling you,
right.
you.
So when we're talking about fees with the estate and how life insurance comes into play, it's a huge asset
It's a
in
great
how all of this
cushion.
can work out.
Great cushion.
Yeah.
Thank you for that. All right. So, as I had said earlier, with the non-identified benefits, persons may not think about it, loss of income, so it can help with those who are left behind, their liabilities to pay, to deal with. And so, take for instance, as someone who would have been giving the greater portion towards a mortgage payment, they pass on. What happens? You understand? As it relates to even motor vehicles, you have the very furniture in the house. Is it that they're going to be repossessed? Is it that they're going to, foreclose? What is going to happen? So, having the life insurance in place, it helps with these things. Um, as it
Another thing
relates,
to share for,
yes.
just to support it there. We can think about it the other way around. We don't have to just think about death and the estate alone. Because they might have
No.
some people saying, oh, yeah, man, I'm not going to be richer. Oh, I must think about death. Well, even in getting a mortgage, sometimes you have to get a life insurance
Yes,
policy.
I'm gonna touch on that. Yes.
Yeah. Okay.
Yes.
I won't steal your thunder. I'm sorry. Go ahead.
Right. So, as I said, some persons use life insurance for wealth generation, and that builds, from one generation to the others, and they enjoy that. You have a case whereby you can have disability income. As I say, you have benefits that can be embedded into the plan that you're taking. So, if there is any form of disability, based on the type of plan that you opted for, once that is a part of the plan, that then you can look to get that as well, the disability income. What if there's an accident? No, accidents are different types, of different types. It can be a stray bullet. It can be car accident. It can be on the road. It can be falling from a tree. What if you have an accident that results in death? The beauty about quite a few of these plans is that with accidental death and dismemberment, a rider, that's a benefit that is added to plans. It would mean that you can get this benefit up to the same amount as the coverage that you had chosen. So you can have a case whereby you have say $60 million in coverage and you add accidental death and dismemberment for the same amount. If there's death by accident, then it's double the coverage amount that is paid out. Right? And you heard Kodia speak about wait period, which I'm going to get into later. There's no wait period when there's death by accident. And then as it relates to dismemberment, if there's an accident that results in a part of the body being dismembered, meaning cut off, then it means that you will be able to get a portion. The contracts will tell you how much based on what is happening. You get a portion of the accidental death and dismemberment amount to deal with the injury. And later on in life, the death benefit is still paid out when the person passes on.
So just to be clear, that's something that you'd have to discuss with your advisor to say that this is a benefit that you'd like to add.
That's something that the advisor would definitely share with um, prospects to say, this is available, explain it, and the just share with them the benefits of having it and recommend it, because we can't force anyone to take it. We just share the
Okay.
information, and if there are persons who may be aware of it, they call it straight up. This is what I want on my plan. But there are some who don't know, and so it's really our responsibility to share with them. And we share with them
Mhm.
based on what they would have said. Hakeem spoke to it, Kodia spoke to it, based on what persons will just talk. And if we are to listen as advisors, we are to pay attention, because that's how we find out what the needs are, whether they're perceived, whether it is they're not. And then we can make the recommendations, and from there, a decision is arrived at. We
Right,
guide, but we don't
right,
force,
right.
right?
So I have a
Uh,
question though about
yes.
the dismemberment. I'm very curious. So is there a criteria for a body part? I'm thinking if I meet into an accident, I have a plan and my pinky goes missing. Can I get some money from this?
So, as I indicated earlier, the plan itself, the contract itself, would outline like the injury, and like not, it could have been the tip of it, right where the nail is, Shante, but based the percentage of the finger. You understand me? So based on, you'd have to really go in or call into your agent and let them know what is happening, and they'll be able, based on the medical report, they'll be able to advise you as it relates to the claim, what can be honored and how much you can get.
Okay. All right.
Yeah. All right. So let me see now, as it relates to one point to note with the life insurance, there may be a case whereby a person is faced with a terminal illness. And that being so, once they can provide satisfactory proof of this, they can get 50% of the death benefit. But point to note, with the plan that they would have had to have it in effect for a period of time. That's what you call a waiting period. So for some of these plans, it would mean 2 years waiting period. And be mindful again, insurance companies are there to ensure persons secure themselves and loved ones. But we are aware that for some of these plans, like what we call coupon plans, the non-medical plans, whereby we don't know the health status, we also have to protect ourselves, the insurance companies, because persons will know the timeline they're given and come and get an insurance plan just so. You understand? So that's why that's one of the reasons the wait periods are there as well. All right, so let's go into what was mentioned earlier, with the mortgage and using the health insurance as security, right? So we have what you call creditor life insurance. This is optional. It is shared by, when you go in for mortgage, it is shared by the representative that this option is available to you, and it is highly encouraged that you get it. So, as you're getting a mortgage, the property is valued on how much millions of dollars. What this does is cover the whatever it is that you're borrowing. So in the event you pass away, whoever is left with that property can rest assured that it is taken care of. The bank don't have to come back and take it. You understand? We are not put out on the streets. The same thing, this same creditor life insurance, it is embedded in loans. So if you should pass on, the loans can be paid out. Now, pointing out, it's not something that you can walk into, like to one of us, Kodia, Hakeem, myself, and get. But this is when you go to the loan officer, you go to the mortgage, to get a mortgage, and the representative there will work it out, and show you what it will look like. When they work out the amount, they will give you the total payment as it relates to the mortgage payment and the creditor life insurance payment, spread it out over whatever time, and you pay that money. So that's just the information for you to see that it is a benefit to have life insurance. If it's a case whereby you have coverage separate and apart. So this, I think it is Kodia or it's Hakeem. No, Hakeem mentioned that you can have group life, but be mindful, as long as you step from under the umbrella of a company, you do not have that insurance anymore. So that is why it's key to have individual life insurance. You might have life insurance, some coverage go up to a couple millions. Well, you can assign that to be used as security for mortgage as well. So there's a plus there as well. And whatever the difference is, if it's still not, you might have to a $12 million insurance plan. It's not enough to cover whatever the value of the property is. You can look at getting some creditor life insurance to pick up the slack. All right.
Thanks, Sharifa.
I see a question here. Can I use my insurance as collateral for? Okay. All right. I just answered that. Okay. So who can apply for life insurance? Kodia touched on it. Various persons can apply based on your health status, based on age, based on gender. You can apply, just be mindful that based on what is presented, it will be a decision as it relates to medical versus non-medical. And as you know, Kodia went into that in detail, but the basic thing is medical means you do a medical test, non-medical, you don't do a medical test. But then with the non-medical, the same thing as would apply for a critical illness plan, it applies for a life insurance plan. If someone comes and they for a non-medical life insurance plan, and I'm not asking any questions, but if they should share something, I have a duty to still document it. It does not mean they cannot get the plan, especially if it is a guaranteed whole life, a guaranteed issue. One is a guaranteed issue plan. It means that the person can get the plan even if they have stage 4 cancer, even if they have HIV/AIDS. Right? So there are plans.
Hold on, you have to repeat that part. So there are plans that exist, even if
there are plans that exist, various persons can get. Don't think that because of a particular diagnosis, you won't be eligible. It's just a matter of based on what you present, whether the health status also, you understand, mainly the health status, what you present. And even if you don't, it's the coupon plans, the non-medical plans. Even if you take a non-medical, there's a wait period, as long as you're mindful that there's a wait period, meaning how long you have to wait before you can claim. As long as you're mindful of the different things that govern the plans and what we take into consideration, yes, you can apply and see what is best suited for you, what will be you'll be eligible for, and what will be best suited for you. So as it relates to age, persons from 18 years old up to in their 70s, I think for the credit union, when you think of a family indemnity plan, which I'll touch on more later, they can get coverage, right? Children can get coverage because Kodia spoke about the critical illness plan, and I'm speaking about the life insurance plan. Point to note, you have individual plans and you have family plans. So family plans allow you to add like spouse, children, parents, right? So you can come in and get plans. It's just a matter of when you're having a discussion with the advisor, they'll be better able to guide you as to what when in hearing everything that is being said, they're able to narrow it down and steer you towards what is available for you based on your situation and also the needs that have been identified.
Right. So insurance should be very specific. So it's specific to each person that comes along.
Exactly.
So you can tailor things. Right.
Exactly.
So we have a question here. We have to run. We have to jump. We have another. We have some other things we want to touch on. But Adriel Williams has a question here. Are there any policies with a critical illness or health insurance that covers the cost of therapy sessions for dealing with mental health issues / ailments?
Kodia team. I
I
would
think
love for them to,
right. So I think I'm gonna hold this question
yeah.
to be discussed a little after. So what we're gonna go into right after this is a testimonial from
Mhm.
O'Neill, and then we're gonna have sort of panel discussion where we can take some more questions. I'm gonna allow everybody to be able to jump in to answer that. So Sharifa, thank you so much for sharing with us. We
Thank
have to
you
go to the
too.
next section. Ashdane or Julian, can you confirm if O'Shane is ready to share his testimonial?
I'm not seeing a shade right now.
All right, so we're not seeing him. So what we're gonna do is go into the panel discussion. So we still have the question here. So I'm gonna allow Hakeem and Kodia to just chime in on this one.
Okay, so when it comes on to mental health issues, oh, sorry about that. Good night again, everyone. But yeah, when we're actually dealing with mental health issues, health insurance only chips in when you have to see a psychiatrist that deals with the diagnosis of a mental issue, right? So the process would be you'd have to first see a therapist. That cost will be out of pocket, and then based on what the therapist says and their referral, and you have to go to a psychiatrist, then your health insurance will then kick in. I hope that answers the question.
Thank you so much. So do we have any more questions in the comment section that you'd like for the panel here? We have Kodia, we have Hakeem, we have Sharifa, that you'd like them to address about insurance, whether health, critical illness, or life.
Just to add to the question that's still on screen, what you can do too is to call your insurance provider and find out if under the specialist consultation provision of your contract, if it is a feature of your contract, if you'd be able to get any kind of mental health benefits. So you can explore whether the specialist consultation would cover even an initial visit to a therapist. You can explore that with your provider.
And I think
Thank you
also,
so much.
Cordia, that's a good point. I think also with speaking with for persons who are in corporations, speaking with their employee assistance program coordinator or representative, they can better guide them as well.
Thank you. We have another question here from Stefan. We accessing some of the life insurance to cover critical illnesses. Would there be specific illnesses that I could use this for?
I'm reading it, but I'm trying to.
Right.
I'm trying to.
So I think they're asking what illnesses they would use. I think they're asking for a breakdown possibly of the critical illnesses that were touched on.
So when I listen to Cordia speaking, because I know that there are the plans will vary. You have she used the term underwritten, meaning there's a medical, and you know, you have the medical plan versus the non-medical. So you would have to look at what it is that the plans are offering to then see what you can get coverage payout for. You understand? So
All
some of
right.
them are strictly for critical. That's I made a distinction between chronic and critical. You have plans that cover both. You have plans that just focus on critical. You understand? So it's
Right.
dependent on what plan options, you know, or option you choose. I'm pointing note you can have more than one critical illness plan. You can have more than one life insurance plan. It's based on your portfolio and when you review it, are there any gaps that you want to fill, and you do so accordingly.
Oh, okay.
And
Yeah.
one,
Go ahead, Hakeem.
yeah, and one thing to add to that, if we're actually speaking on life insurance, the only time they'd actually paid for a critical illness is when that critical illness becomes terminal. So if you have a life insurance plan worth $20 million and you've reached a stage where you're actually terminally ill and you have 18 months to live, the entire sum insured is paid out to you.
Nice. Nice. So we have some more questions coming along, but let me ask a troublesome question. Very, very troublesome, and I think Hakeem might be the one to answer this. So if I am moving to another company, or I'm just employed and they're asking me to do a medical for my health plan or for the company's health plan, can I refuse to do that medical?
No, not at
No,
all.
no, you can't.
They have their own they have their own doctors as well. They will tell you where to go. And it's just like some companies, you have to do a police report. It's just a
Right.
part of the onboarding process, so you can't get out of it. If you decline to, I guess you'd have to really have a one-on-one discussion with HR to explain why, because it sends a red flag. Basically, why wouldn't you? Maybe that does not saying that you will not be recruited, or but it's just a matter of what could have caused this hesitation.
Right. So following up from that, how much do you really need to share with the company if you're trying to get onto their health plan?
Hakeem. Tricky question. Tricky question.
Okay.
Let me just say, integrity is key, Shantae. Let me just put that out there. Integrity is key. And one of the things to note with the critical illness, persons would think that because like a non-medical plan, they don't ask me anything. So I keep it to myself. Point to note is that the medical report will say a lot. So be mindful of those things. Because
Okay.
you're not asked, don't think it won't show. Because based on timelines, when life events happen, the company may decide to do some investigation to see when did this start, what has been happening. Was there, would there have been a point where this could have come out and it never did? Was there, was it deliberate? They have to be mindful.
Okay, and also to actually add to that, when it comes down to the medical, what they really want is to know if you have any pre-existing conditions or any kind of allergic reactions, so they can actually help to alter the environment to be conducive to you.
Big point.
Yeah. You want to be as honest as possible as well, because this will now impact your claims experience with the company. So you don't want to be hiding information at the stage of application, because it could come back to haunt you when it is time to make a claim. So whatever the issues are, whatever questions are asked of you at the time when you're applying, you want to be upfront, you want to be forthright with the insurance company so that they can properly assess the risk. You don't want to go in and present yourself as a perfectly healthy person who needs surgery tomorrow. When they investigate it, they realize that you would have known for months that you had that particular condition. These are some of the things that bring tension into agent, insurance company, client relationships. To get the best experience from your policies from an insurance company, it's best to declare whatever it is that they need to assess the risk in giving you insurance.
Right.
So it's a mutually beneficial experience happening here. Transaction, whatever you want to call it. That's basically what it is. It's not one-sided at all. That's not how it should be.
Got it. And as all the presenters have been talking about before, if you are actually ill, it's not the end of the world please speak to an advisor about what options are available to you, right? So if you are ill, there are options available to you, so you don't have to lie about it, right?
Right. That's key. That's
That's
key.
key. So right now, since we don't have any more questions at this time, I'm gonna go over into our testimonial, and we'll be hearing from Simon Johnson about his own experience. Simon, you online? You ready? I think Simon is muted.
I don't think Simon ready at all.
All right, so he's joining us, and I'll allow him to speak here.
Hi, good evening, everyone. Is everybody hearing me?
Yes.
Yes.
Yeah, man. So, I mean, I guess with me, it's a good thing that I got some first-hand experience with this insurance thing recently. So, I mean, I tore a muscle about 2 months ago in my leg, and one of the biggest worries when I tore the muscle was, boy, I really hope the insurance cover this. And when I went to the surgeon who was going to do the procedure, and he sent in the request to the insurance provider, and they sent back a letter. Uh, I found out, so the surgery costed upwards of 500,000, so it's more than 500,000. And overall, I ended up paying less than 5% of that amount. And if it is that I was supposed to pay that amount out of cash or investments, I would have probably had to, one, liquidate some investment that I didn't want to, go into my savings and emergency savings, which I never wanted to do. So I realized firsthand how important something like this can be. That's just from my perspective. That's from my perspective. And I had a friend who found out that he had a rare blood disease, and he was in the hospital. He said, I think he said it was for about a week or so, probably a little over a week. He said based on the procedures that he did, and the transfusion that he did, his bill came up to, I don't want to misquote him, but it was somewhere around $3 million, just for that short period of time. And he said his insurance paid almost everything. And I mean, in his own words, if it wasn't for his insurance, he wouldn't be here today. Because it was a case that he had to get that procedure to live. So I understand firsthand, and I've heard stories of how important this is. And I always tell people that this insurance thing, everybody is excited about investing. Um, some are excited about savings and money management, but insurance isn't really a sexy topic for many. And I don't know how you can have a real holistic financial plan or financial goals going forward without your insurance being a part of that plan. Yeah, that's all I have to say.
Yeah, that's key. You use your insurance to protect. They're think of it as a pyramid, and really we should be dealing with the risks associated to our person and also to our families before we even get to the point of investing. You know, because part of the function of the insurance is that it helps you to protect those investments. As Simon just said, he would have had to go into those investments. So we sometimes start at the top and trickle down, and it's not in our best interest. You deal with the risks at the bottom first, your health insurance, critical life insurance, and then you can build on that. Because the thing about investing first is that you need time. There are persons who we meet who will say, you know, I'll invest my money and I can have that as a burial fund, or I can have that to deal with critical illnesses. Listen, you put in $50,000 today. There's no guarantee that you even have $50,000 based on market conditions tomorrow. You know, and you don't know when you will need that money. And so for that uncertainty in terms of the when your investment will accumulate to a level that it can be useful, you have to use tools like life insurance to manage the risks that you could befall until such time. And what you'll find is that even when you become top investors and you're really, you really start to generate cash, even then you'll still find value and usefulness in having your insurance policies.
Right.
Claudia and Simon, I listen and I'm like, I'm smiling here because people don't realize that what you would have taken years to build your investment, 1 week alone in the hospital can wipe that out.
That's so true.
And the insurance is what comes in and stabilizes everything.
Yeah. There's one quick thing I wanted to mention, if time permits. I know one of the challenges we have, especially with younger persons and critical illness, is that they really can't envision themselves getting blind. You can't imagine circumstances that would cause you to be deaf, you know? But these are the real things that happen. Just in terms of data quickly, 20% of the claims that were made to one particular life insurance company in 2019 were for clients between the ages of 25 and 39. That's 20% of the claims. 20% of the payout that they made for critical illnesses were two persons within that same age group. 50, where is it now? About 50%, 56% of the claims that were made last year were from persons between 40 years old and 54 years old. Those are young people.
Mm-hmm.
Understand? The claims from older groups were much less. So it's really the 25 to 54 age group that were making these claims. If you needed to make a claim now, are you in a position to call on an insurance company to say, I have a diagnosis of cancer, I have had a stroke? You know, we have to position ourselves to be able to have somebody to call on other than the resources of our families and friends who never have no plan for save their money for our medical needs. Remember, as individuals, we're all on our individual financial planning journey. And so the money that Hakeem has in his savings, he has no intent, it was never earmarked to help Kodia with healthcare. He has his own plans for his life, so too our family members and so on. So we really have to start planning for ourselves so that even if we end up in these situations, we can start our care, or we can manage the bills for a few months and then ask for assistance to help out, but not that we're asking from day one for somebody to help us. You know, you want to position yourself so you can even help yourself a little bit. A small policy with a little coverage is better than not being able to start at all. You're at zero. 2 million
Right.
and no money at all.
Right. As Hakeem said, you need the umbrella. Don't
You
go out
definitely need an
into
umbrella.
the rain unprotected. Especially if you get your feet wet, then your entire body soaked. Get your umbrella, get your insurance. So with
Absolutely.
that, right. So with that said, I want to thank all the presenters tonight. I want to give you some time to give your contact information to the people. So Hakeem, quickly, can you tell them how can we reach you?
Okay, guys. You can contact me at Hakeem Dawkins on all social platforms. My email is hakeemdawkins@gmail.com or hakeemd@lawinsurance.com. Or you can simply call or WhatsApp me at 275-0186. That's 275-0186.
Thank you so much, Hakeem. Kodia, how can we reach you?
All right. So I can be reached at 876-357-4452. That's my business cell, 357-4452. Just quickly, guys, we're in the middle of a pandemic. I didn't get to touch on it, but let me just say that in terms of the requirements to access your critical illness care, those could change very soon as the insurance companies gather information in terms of what's happening in the market and what's expected to happen. There's information out there about long COVID and the impact, the continued impact on the body that could very well result in changes to, the requirements from the insurance companies for accessing these critical illness products. The time for you to act in terms of securing yourself is now, before you are not affected by those changes. Thanks.
Right. So thank you, Kodia. You're breaking up a bit. So let me just repeat. You're saying that right now in the midst of the pandemic, there's information out there, right? And the insurance companies are reviewing the impact of COVID-19, right?
Certainly, because remember, they're
Right.
risk-based based companies. If it is that we're getting information that COVID is affected young people without pre-existing conditions, it is that they are seeing information that long-term lung damage is expected. The COVID is affecting other organs of the body, the heart, for instance. They're using that information, and certainly, as consumers, we can expect that they will include that information in their planning in terms of what policies may cost, in terms of what may be required for us to access them. So in the future, we could very well see lung function tests becoming a standard for accessing some critical illness products. That's not the case now. So as we go along, yes, we have to be thinking about these things. The requirements are simple right now. Let's act on it, get the coverage that we need, because we don't know how the future requirements could impact our ability to access these products.
All right, Kodia. So quickly, once again, I think you were breaking up. Email address, contact information.
Okay, so email is cclarke, so that's cclarke @cabjm.com, and my number 876-357-4452.
Thank you. Sharifa, your time. Tell the people how they can reach you.
All right, so it is S Grandison, SGRANDISON at jnlifeinsurance.com. So that's S Grandison at jnlifeinsurance.com. And my contact number is 876-461-0795. So that's 876-461-0795. Looking forward
Thank
to
you
hearing
so
from her.
much. Thank you. Thank you. Thank you. Thank you to all our presenters. Hakeem, Kodia, Sharifa, you did an amazing job. We learned about why insurance matters. So tune in again next month to our next SOTR meeting. We're looking forward to hearing from you. Also, drop in the comments what you thought about today's session. Also, if you want to reach out, please go ahead and do so. You can contact the SOTR team. If you missed the contact information for any of our presenters tonight, again, we want to hear what you'd like to be named. Is it the Rockers? Is it the SOTR family? What do you want to be called? Big up, Rediscover Jamaica. Thank you so much for tuning in. Until next time, big up yourself and keep safe. Bye bye, everybody.
Bye, everyone.
Thanks, everyone. Bye.
Bye-bye.